And welcome back to my morning report analysis videos on Tuesday 21st of November with me, Richard Perry, market analyst at Hantec Markets. Going to look at euro dollar and bit of a consolidation early morning today, but it's still got the legacy of this sort of negative candle that we saw yesterday. The market actually rebounded fairly quickly after that German political uncertainty sort of broke, but then we started to see the market falling back again on. Let me show you the hourly chart. You can see the initial move to the downside, found support and then rallied, but then started to drop away again as Mario Draghi sort of came out and spoke, and it certainly seemed as though that there was more of a dovish tilt to his language, but certainly there is support initially at 1720, which was that initial spike low, following on from the market opening yesterday morning. I think this sort of the outlook of this euro dollar chart is now sort of a little bit uncertain. You could sort of break it down because into the fact that I think we're still in this top pattern. We've got the head and then the right hand shoulder. The right hand shoulder gives that resistance at 1880. That's a key resistance now for the bulls. You need to break out above 1880 to really generate upside momentum. If you don't do that, you're going to see the market just ranging sideways, I think, between 1660, which is the neckline, and 1730, which is sort of broadly this 38.2% fib level, but also sort of these older lows as well. And that's basically where we see the market at the moment. So you're into the support band, really, 1720 to down to 1660. Below 1660, I think you then sort of regain the downside initiative, and then you're looking back at 1550 again, as that top pattern sort of reignites once more. But I think above the support, is sort of fairly neutrally configured, and you got the moving averages, which are basically flat. The momentum indicators, which 50 on the RSI, basically neutral, coming up towards neutral on the MACD lines. Sort of ticking a little bit lower as the market has reacted lower today, but yesterday on the stochastics. But yeah, generally speaking, fairly neutrally configured, I would say, on euro dollar. But yeah, you've got that support at 1720 initially, and that's sort of helping to sort of maintain the RSI above 30, between 30 and 70. You could argue again fairly neutrally configured, but the more pressure that grows on the 1720, you could argue the market sort of turns a little bit more negatively configured, but still fairly neutral even on the hourly chart. But I wish you good luck in your trading today, and I will speak to you later. Thank you.